Hey guys, how's it going? It's Andy from Magoo Investing. Happy Friday. This week we've talked about a lot of stocks, and today I'm making my biggest list of the week. When I started this morning, I was looking for some kind of exciting stocks because it's Friday fun day. And I was looking at some different articles, and some of the titles that were popping up a lot were stocks that will make you rich. And so while these stocks I'm going to be talking about today probably won't make me rich because I'm not investing with that much money, the whole idea is that these are stocks that I'd be looking to buy for a long-term investment because they're in a business or a sector that's going to expand significantly in the next couple years. So today's video, I'm going to be talking about 7 stocks that will make you rich if you're going to be investing for a long-term future. These are all stocks that are up at least 80% on the year, some of them up even more than that. And they're stocks that I personally love, and I'm considering adding them to my position going into the end of the year. But before getting started, I do have to say that I'm not a licensed financial advisor, and this is not financial advice. Anything you hear in this video is just me giving my own opinions on the stock market, and you need to do your own research before making any investment decisions. Also, if you've been enjoying these videos, I really appreciate it. Hit that like and subscribe button, as it would help my channel out a lot. Also, this week has mainly been fueled by stock suggestions that you guys have been putting in the comments. So if there's a stock that I have not talked about this week, be sure to leave it in the comment section down below. Also, since there are 7 stocks in this video, if I get to a stock that you don't really care about, be sure to check the description because there are timestamps if you want to skip around to a stock that you want to learn more about. So the first stock on this list is going to be a stock that I actually have a lot of history with. Back when I started making videos on this channel like a year and a half, almost 2 years ago, one of the stocks that I had a lot of success with early on was Roku, ticker symbol ROKU. Currently, Roku is trading for $260 and it's up 94% on the year. This is a stock that I bought going into 2019. It was like the end of 2018, back when we had the trade war stuff and a lot of the tech companies were suffering. And I bought this stock down at $30. I had like a 75% profit and sold. And obviously I missed out a lot based off of how it's performed so far this year. But Roku is one of the best tech companies to take advantage of the cord cutting movement. And for those of you somehow that don't know what that means, it's just the idea that people are cutting the cord from like basic cable and they're doing more streaming stuff. And so Roku is a company that makes devices that are used as a streaming hub, and they've also started making TVs that work directly as a streaming device. And so my parents have a Roku TV back home. When I lived in my college town, we had a couple Roku devices, and it was so nice because since there was 6 of us living in that house, it was very easy to lose the remote to the TV, and we could just download the app, and everyone had the ability to change whatever we were watching, and it was super nice. And Roku is one of those products that I've always loved. With the pandemic and lack of new content, and especially sports, we've been seeing the cord-cutting movement starting to accelerate. Estimates are that by 2024, there will be almost 47 million cord-cutting households that will make up around 1/3 of all U.S. households. So as I mentioned, this is a type of business that is expanding. Streaming wars have been a thing for a while at this point, but Roku is in a great spot because they're not exactly competing with some of the giants like Disney, Netflix, AT&T with Time Warner. They're just kind of on the side, and they're just the streaming device that allows these streaming services to do well. So they're not really fighting against these giant tech companies. Roku spiked this week on news that it did make a deal with HBO Max, which is owned by AT&T, which is one of the last big streaming options that wasn't available on the service. So at this point, pretty much any streaming option that you have is now available on Roku. And so now there's not really any reason to not have Roku. I remember in the past there were some problems with Disney, but now that has been fixed, and you have pretty much every streaming option possible on Roku. This graphic shows that is the single largest company when it comes to the streaming wars, besides the other category, which I'm guessing just means kind of everything else. Some of the streaming that I do is based off of my Xbox or my PlayStation, so I'm assuming that's what's going to be in that category. They also released a $17 product, which is very cheap, that will compete with Amazon's Fire Stick that is also relatively cheap. So they're trying to expand their market share. They're doing that with a cheaper option. They have the TVs, which are more expensive but are very high quality. And then they just have their overall, their normal product, which I think is a solid device. Their last earnings report saw some impressive growth for the company, and it jumped 13% on the news. Revenue grew 73% in the third quarter. Its user base increased by 43%. And they've seen accelerated user growth for all of 2020, even before the pandemic really started. And while that growth probably isn't sustainable, the company said that it should support sustainable premium revenue growth and margin expansion for years to come. And so when I put up the annual revenue growth, it is increased over time, and it just looks very solid. And so Roku is one of these companies that was poised to do well when the pandemic started, and being a part of the cord cutting movement, which is only expected to accelerate over time, Roku's in a great spot. So let's hop on over the charts and I'll talk about what I see with Roku, ticker symbol ROKU. So here we are looking at the first stock on this list, which is going to be Roku, ticker symbol ROKU. And so this is a stock that I actually have a lot of history trading. This line right here, which is 2018 going into 2019, this was one of the first stocks that I had a huge amount of profit coming from it. I think I made a video talking about how it was up like 30 or 40% in just a couple weeks. And so this was towards the end of 2018 where we're big into the trade war stuff, and a lot of the tech companies were selling off. And I saw this as being a great buying opportunity. Then after the earnings report, I think I sold up around 70. So that's actually a bit way bigger of a profit than I was expecting. But I have a lot of history with this company, and it has incredible growth since that point. And based off of how we're seeing these changes in the consumer market, people are cutting the cords. This recent uptrend is just insane, where it went from, let's see, I guess is the pandemic, it went from $58 up to $265. So it's seen incredible growth in 2020. And while that normally does scare me, when I see companies that have had incredible years, I want to see potential growth in the sector that they're a part of. And when we're seeing the cord cutting movement, this is not something that's going to go away. And so based off of the charts, recently it has been respecting the 50-day moving average. So maybe not the best buying opportunity right now, but if it comes down and retests this is a stock that I'm going to have on my watch list for the next couple weeks to try to get it if it has any sort of selling off. So next up, we're going to be talking about Pinterest, ticker symbol PINS. Currently, Pinterest is trading for $67, and it's up 260% on the year. So going into this year, Pinterest was a stock that I really couldn't figure out which direction it was going. It was a stock that I thought had a lot of potential, but it just wasn't really doing much. And then a couple weeks ago, when I was talking about the social media stocks to buy, it started getting a really big boost after Snapchat came out with surprise earnings that beat expectations across the board, especially with ad revenue. And as a result of that, a lot of these social media stocks went crazy, and then Pinterest announced earnings, and it shot up after that because they had fantastic earnings. But so the stock IPO'd in April of 2019, and with some huge momentum, it was up almost 30% on its day that it actually IPO'd. And as I mentioned, IPOs are so kind of hit and miss because it's really hard to judge the value, especially of tech companies. But based off of that success at the beginning of the year, after it IPO'd, it fell to below its IPO price by the end of November of that year. And as I mentioned, it's just gotten this boost from the ad revenue stuff that we've seen with all the other social media stocks. But compared to those other social media stocks, I think Pinterest is in a significantly better spot because it's not really a social media stock, as weird as it sounds. It's one of these platforms that it gets marketed as a social media platform, but there's not as much communication, there's not as much discourse going between people. It's mainly people kind of choosing whatever they want to show on the platform, and it just has so much positivity. And why positivity seems like a good thing is that it's a great place for people to advertise. And unlike some of the places like Facebook, Twitter, and Snapchat that have kind of resisted, the users have resisted expanding into the ad stuff, Pinterest is built to thrive off of that type of environment. And so based off of that, in their last earnings report, they jumped 30% after hours with huge beats on revenue. And my favorite metric, which is the monthly average user, is up to 343 million, which is up 46% year over year. So we're seeing some huge user growth, probably because of the stay-at-home movement and the type of stuff that people do on Pinterest is they plan for different projects and they get different ideas. They expected their fourth quarter numbers to be up around 60% year over year. And unlike most social media stocks that struggle to integrate ads, Pinterest is specifically built for that idea. Pinterest is a great place for advertisers as 97% of searches are unbranded, and 77% of weekly Pinterest users say that have discovered a new brand or product on the site. And so the unbranded searches means that they're just not searching for a specific product. They're kind of looking at an umbrella term. And for a company that's trying to take some of the market, that's a great place to advertise. 50% of users have made a purchase after seeing a promoted pin, making it an effective place for ad spending for these companies to put money onto the platform. And since it's a very positive platform, we don't see a lot of the negativity around Twitter and Facebook about how they operate. Especially when we've been seeing the ad boycott stuff on Facebook and Twitter. You don't have that with Pinterest because it's overall a very positive place. So I think it's got a lot of growth potential. It is a great place to advertise. And with that out of the way, let's hop on the computer and I'll talk about what I see with the charts for Pinterest. Ticker symbol PINS. So Pinterest was a stock that I talked about when the social media stocks were all doing their earnings reports. And I had it charted out because it was a really interesting chart because we had this downward channel for a long time. And then 2020 started, and then it has pushed up with this upward channel, and it's kind of reverse directions. And one of the things I was looking at, this is right before Snap earnings. As you can see, it's a few days before this actual earnings. If Snap had poor earnings, I was hoping that it would fall down to this $35 level to buy in. Obviously, we know that Snap had great earnings, Pinterest rose with it, and then they had incredible earnings that shot it up. And at this point, even though it was so overextended, it sold off, was bought back up, sold off, and has recently been bought back up. And it looks like it's on like a 7-day green streak at this point. So this company has a lot of momentum behind it. And it's one of the only social media stocks that has just like an overall positive vibe to it. I hate talking about vibes, but for an advertiser, there's so much positivity on this website. And since the numbers that I talked about on how effective they are at finding products that people actually want to see, this is a great place for advertising revenue to increase over time. And so we've seen this incredible bounce back, and I think this stock has a lot of upside potential. This is the entirety that the stock's been public, so we are getting close to the all-time high again, getting close to the $69 mark. But yeah, the upside potential of this company is so bright. Okay, the next stocks on this list are actually going to be two of them. I'm going to be talking about Square, ticker symbol SQ, and PayPal, ticker symbol PYPL, kind of together. And so Square is trading for $197, and it's up 214%, while PayPal is at $192, and it's up 78%. These are two stocks that have done incredibly well. I've always kind of felt more inclined to invest in something like a PayPal because I love Venmo, but looking at the numbers, Square is definitely the company to invest in if you're looking for explosive growth. But if you're looking for a little bit more stability, I think that PayPal is the best place to go. So while I love PayPal, Square has seen explosive growth. Their app with the Cash App has become way more profitable than PayPal's Venmo. And while the Cash App is significantly smaller with 32 million users compared to the 65 million from Venmo, it's projected to be a bigger moneymaker than Venmo. Expectations are that Square's Cash App will bring in $3.3 billion in revenue in 2022, while Venmo will only bring in $1.6. And they're going to have significantly higher profit margins on the Cash App. They're going to be turning $3.3 billion in revenue into $2.7 billion in profit, while Venmo will only make $500 million from its $1.6 billion in revenue. And so while Venmo only brings in around $12 per user a year, Cash App is bringing in $54 per user a year. So the explosive growth that we're seeing with the Cash App has really been boosting Square overall. Part of this comes from their ability to buy and sell Bitcoin on the actual app and the ability to trade stocks on the Cash App. So you're getting a lot of the transaction fees, which is helping them bring in slightly more profit, not even slightly, significantly more profit than Venmo, but the growth is expected to continue in the next couple years. Their last earnings report was solid. Gross profit increased by 59%. Net revenue jumped 140% to $3 billion, and gross payment volume for the actual Square platforms for the merchants increased by 9%. And so when I put up the revenue chart, you can see the crazy increases in revenue that the company has seen. So I decided to put Square and PayPal together because they are both going to grow as this overall sector increases and becomes more common. Especially with the online transactions, these two companies have done very well. And so while I personally like PayPal as a company more, the explosive growth of Square is not something that I can avoid anymore. And so I'm going to put both of these on this list, and let's hop on over the charts and I'll talk about what I see with both of these charts with Square, ticker symbol SQ, and PayPal, ticker symbol PYPL. Okay, so here we are looking at Square, ticker symbol SQ. As you can see, it's had an incredible 2020 based off of the numbers that I talked about. Even looking at that, I think the stock has incredible potential just because of it hasn't just been a pandemic thing where the stock was really struggling before this. The stock had gone from $9 to $85 before the pandemic even really hit. But yes, the pandemic has definitely helped, and I think it's shown the legitimacy of this business. And some of the numbers that we're seeing from the Cash App is so impressive. They recently had an investment with Bitcoin that has paid off super quick. And so this is a stock that, while it is up significantly in 2020, the growth potential of the company is so bright, and just some of the projections that they're showing for revenue makes me feel kind of comfortable buying into this stock. Obviously, these all have a lot of risk, and if I was going for a less risky play with a similar type of idea, that's why I would go with something like a PayPal. PayPal has a track record that's a little bit longer than something like a Square, and while it is up significantly in 2020, it's nowhere near the numbers that we've been seeing with Square. So it definitely has a little bit more of a conservative play, but it still has the growth potential that comes from this type of sector because the peer-to-peer transactions are increasing. We're showing the legitimacy of contactless payments, and stuff like a PayPal or a Square is just so good right now. Next up, I want to talk about Shopify, ticker symbol SHOP. Currently, it's trading for $980, and it's up 147% on the year. It's always good when you're researching a stock, and one of the top articles that pops up is an analyst explaining why they think the company should be worth like 30% more at this point, even though it's already up around 150% on the year. So Shopify is a Canadian e-commerce company that has done very well during the pandemic. While the company brought in $2.5 billion in the past 12 months with revenue, there's the expectation that the company could bring in up to $10 billion in the next 5 years. And the company sees their 2020 success continuing even after the pandemic ends, which is always something you want to see. With these stay-at-home stocks, you want to see them have positive outlooks going forward. You don't want to see this be like a one-off year where the company has done well because of the pandemic, but they're not going to be able to continue that type of growth. In the last earnings report, the company said the pandemic highlighted the strengths of the platform, and it has really solidified their user base. From that report, the company announced revenue of $767 million, which was up 96% year over year. And while they posted a loss of $73 million a year ago, this quarter it was a profit of $191 million. And while these numbers are expected to slow down during the pandemic, analysts think that the e-commerce sales will have an annual growth rate of 15% from 2020 going to 2027, giving the company potential to increase in size significantly in upcoming years. And they've shown that they deserve a place in this e-commerce discussion for who are the top dogs. Obviously, Amazon's up there, but when you have Shopify, Etsy, even eBay, you have plenty of options, and Shopify has shown that they've done very well during this time, and they don't expect to slow up anytime soon. So here's the revenue chart in case you didn't believe me. Steady growth with their trailing 12-month revenue, which is the top graphic, and impressive year-over-year quarterly growth at the bottom. And with that boom in revenue, the profit should continue to roll in after spending a lot of cash on growth initiatives for the past couple years. And I think the future is very bright for Shopify, and it's a stock that I expect to increase in price over the next couple of years. So let's hop on over the charts, and I'll talk about what I see with Shopify, ticker symbol SHOP. Okay, next we're looking at Shopify, ticker symbol SHOP. It is getting close to the $1,000 mark, which is pretty crazy considering it started the year, let's see, where was it at the beginning of the year? Around $400. So an incredible 2020. I mean, that's the whole point of this video. But based off of the price movement, it has been going a little bit horizontal recently. And so this could be an interesting swing play. It has recently bounced off of this 885 area, and it's pushing above the 50-day moving average. So I'm short-term bullish, and I'm also long-term bullish. Compared to a lot of the other stocks that I've talked about so far in this video, a lot of them are getting pretty close to all-time highs, but it's been a recent all-time high. With something like a Shopify, it has been bouncing around between the 885 and like the $1,000 range. And so that is a decent amount of swing potential. And for a company that I think has great long-term growth potential, I think this is a great buying opportunity right now. Okay, the second to last stock on this list is going to be Peloton, ticker symbol PTON. Currently, Peloton is trading for $106, and it's up 275% on the year. When I think of stay-at-home stocks, Peloton's probably one of the first ones that I thought of. But even though it's up 275% on the year, I think it's a company that has a lot of upside potential going forward. In the past couple of videos, I've talked about the potential that I see with Lululemon after they bought Mirror. And while Mirror hasn't been rolled out fully at this point, Peloton is fully ready to go, and they have shown explosive growth because of that. You could even consider the stock to be at a discount, considering just a couple weeks ago it was at $140, and now it's at $106. So we're seeing some big deals when it comes to Peloton. It fell because it was considered one of the top stay-at-home stocks, and when the vaccine news came out, Peloton fell because of that. And so we saw some stocks, stuff that I own, like the airlines, cruise ships, banks, that all jumped on that news, and the stay-at-home stocks, which Peloton gets grouped into, fell because of that news. From the last earnings report, the company posted solid numbers, but had a little bit of caution going forward, and that kind of spooked investors. While they posted a revenue of $758 million, which is up 232% year over year, and beat their estimated revenue significantly, subscriptions were up 137% year over year to 1.33 million. But the company did talk about how their high demand is having some problems with their inventory, and they're having some problems with their supply chain. So while there is high demand for these products, they're not able to sell as much as they would be hoping because they're having some supply chain problems, and they just don't have the inventory to be selling the stuff. But for a company, that's not the worst thing in the world to happen. It's better than having no demand. And so this is kind of what we saw with something like a Sonos that had a tough quarter 2 quarters ago because they didn't actually have the products to be selling out. And Peloton is in a similar spot. So buying off of that discount, I think, is a pretty good idea for my portfolio. And with this business model, I'm not super worried. These are expensive products that range between $1,900 and $4,300. And after you buy it, there is a subscription that is $39 a month. And so while that does seem kind of high, especially when we're going into more lockdowns, there are plenty of people that are paying way more a month for an expensive gym membership. And being able to do it from home, I think is a beautiful thing going forward, especially going into the winter when it's freezing. I went for a run today. I drank a little bit of water before I left, and my mustache froze, and I didn't like that. And so being able to work out inside is a great option, and I see a lot of potential, especially going into the holiday season, when I think Peloton is going to be one of the most highly sought after products for the stay-at-home, home workout type of stuff. I think that the home fitness trend will continue, and I think Peloton is in a great spot to take advantage of that. So let's hop on over to the computer, and I'll talk about what I see with Peloton, ticker symbol PTON. Okay, so here we are looking at Peloton, ticker symbol PTON. As you can see, the company has had an incredible 2020. This is when the year started, when it was down at $29. You have the stay-at-home movement, and it's just been steadily rising. It does not have the track record of some of these other companies like a PayPal. This is the 200-day moving average from when it IPO'd. But something that's really attractive to me is the fact that it has sold off since its all-time highs of around $140. So it is $30 cheaper than the all-time high, and I still think that the potential that we've seen with the company is still there. And so I think this is a stock that, yes, it is a little bit overextended. It is one of those go-to stocks that you think about as being a stay-at-home stock. But I think the business is super solid. I think everyone that I know that has a Peloton, it's not that many of them. I don't have that many rich friends, but the people that are a part of this product absolutely love it. And that brand loyalty is so important for the long-term potential of the company because, yes, these actual bikes are expensive and they've had incredible increases in customers. But once you get people to stay on and are paying the reoccurring $39 a month for that, the actual subscription part of it, that's that reoccurring revenue that helps boost the long-term potential of the company. So I think this is a stock that was perfectly set up to do well when the pandemic hit, and it does have some problems when any of the vaccine news, because people do think of Peloton as being that go-to stay-at-home stock that'll really struggle, and that's kind of where we see this the sell-off, and then the earnings report kind of pushed it down as I talked about these supply chain problems. So I think this is a company that has a lot of upside potential, and I think it's so attractive at this kind of a discount compared to where it's been in the past couple weeks. So the last stock in this list is going to be Beyond Meat, ticker symbol BYND. Beyond Meat is trading for $136, and it's up 80% on the year. Beyond Meat isn't as sexy as some of the other stocks that I've talked about on this list. It is only up 80%, which is, a very solid year, but you don't really think of this as being a great stay-at-home stock, but it just has had a great 2020. I think it has fantastic growth potential. Since its IPO in May of 2019, the stock is up 450%. And if you've been around the stock market for a while, you'll kind of remember how kind of manipulated or the hype that went into Beyond Meat right after it IPO'd. It skyrocketed, it fell, and since then it's kind of leveled out, but we're still up 450% from its IPO. The last earnings report saw revenue growth of only 2.7% year over year, which compared to a lot of the other companies that I've talked about on this list is not that impressive. The company has been negatively impacted by the pandemic as the food service business took a bunch of hits with the lockdowns. So far this year, though, sales are up 53% year over year, and sales from their plant-based meat sectors has increased 41% over the past year. So we're seeing some very nice growth in the type of market, and Beyond Meat should be in a great spot to take advantage of that. At this point, Europe is the biggest plant-based meat market, accounting for 39% of the overall market revenue from 2019, but it's likely going to become more popular in 2019, especially as we're seeing some of these fast food chains starting to bring in their products. This market is expected to grow at a compound annual growth rate of 18% until 2025, so there's a lot of potential for growth for this type of market. Recently, McDonald's announced that they're going to be having a vegan burger in 2021 named the McPlant, which I think is a hilarious name. And it's going to be supplied by Beyond Meat for Canada, but it hasn't been announced who's going to be supplying it for North America. Beyond Meat did fall off of this news, so the expectation is that Beyond Meat is not going to be supplying it for North America, but they are for Canada. So it's better than nothing. And so this is a market that has a lot of growth potential, as I mentioned. Beyond Meat's biggest competitor is Impossible, but right now Beyond Meat is the only option to invest in for a company that focuses mainly on plant-based meat products. Impossible is expected to IPO in the next year to maybe 2 years, but right now Beyond Meat is the best option out there. So with that out of the way, let's hop on the computer and finish off the video talking about Beyond Meat, ticker symbol BYND. Okay, so here we are with the most interesting chart from the video. This is Beyond Meat, ticker symbol BYND. This has been one of those stocks that has been all over the place. And the whole reason behind it, it wasn't really manipulated, but this was definitely the definition of a momentum stock. It started increasing in price significantly, and it was kind of like whenever you see, or what we've seen recently with Bitcoin, where it's kind of flying under the radar for a bit, then it gets on everyone's radar. They want to be a part of it because of the incredible gains that the stock has seen, or Bitcoin has seen, and then some of the momentum dies off and we had this big sell-off. But when you look at actually 2020, it started the year at $72 and now it's up at $135. And so it definitely has had its ups and downs. This is not the most beautiful growth chart that we've ever seen, but I think the potential of the business is so attractive, as I talked about with the compounding annual growth rate that's expected to be 18% going through 2025. And at this point, Beyond Meat is one of the only plant-based meat products that you can buy as an actual stock. Impossible is probably their biggest competitor, but it has not IPO'd at this point. So to get some exposure to this type of market, I think Beyond Meat is the best option out there. And based off of the price movement, I'm liking what I'm seeing. I'm seeing a higher high right here compared to, I don't really count this this manipulated area right here, but you get a higher high compared to this. You get a higher low, get a new high, bounces off the 200, and I think this is a fantastic buying opportunity right here. It seems like after the earnings report, it bounced off the 200, and I'm very long-term bullish on Beyond Meat, ticker symbol BYND. So this is probably the most amount of stocks that I've talked about in a video with 7. And I think these are all stocks that have incredible growth potential, specifically because they're all in markets that are expected to grow at a compound annual growth rate of between 10 and 20%. So there's so much potential, and I think these are the leaders in each of these sectors that should take advantage of it. So while they're all up significantly in 2020, I see a lot of long-term potential with these companies. Let me know which stocks you guys are watching for long-term growth in the comment section down below. Thanks for watching. I've appreciated all the support this week, and I will see you in the next video.